Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energy. Let's talk crude oil futures up 0.75% today, reversing a little bit of the almost $3 sell-off that we saw yesterday. A little bit of strength in that, and really the underlying strength has been sort of the tone and the thing behind crude oil for the last couple of weeks. This underlying macroeconomic view of crude oil is really kind of supporting prices and supporting the bullish case for crude oil. But one of the things yesterday that pushed crude oil lower was Russia came out with its production estimates. Actually, it's production confirmation, not its estimates. And it was written that Russia increased their production to over 10.9 million barrels a day. That's slightly higher than the agreed upon limit in the OPEC and Russia and OPEC production cut agreement, even in the face of Iran talking about, Iraq's oil minister talking about extending the production cuts well past where they're agreed upon at this point. But Russia seemed to be bumping up production a little bit. There could be technical factors as to why that happens, but if that becomes a trend, could weigh on crude oil prices a little bit, and that's what happened yesterday. But in the face of that, overnight, there was a tanker attack. Now, that tanker attack was a Saudi oil tanker going through the Straits of Hormuz, hit by a missile fired from Yemen, allegedly by Houthi rebels that are anti-Saudi in the proxy war that's going on between Saudi Arabia and Iran in Yemen. So this particular attack is on the back of 7 missiles that were actually fired into Riyadh, Saudi Arabia, that were intercepted by Saudi Arabian defense systems. So it looks like the Yemeni rebels are pretty intent on making direct hits into Saudi Arabia and onto Saudi Arabian assets. This tanker did get hit, it did get damaged, and it did end up completing its transport and delivering its payload. However, it looks again like the Yemenis are intent on hitting Saudi Arabian targets, Saudi Arabian assets, and if they continue along this path, not only will the geopolitical premium in crude oil rise, but there is the possibility that some actual supply is taken offline if missiles find their marks. So that helped crude oil recover a little bit. The fact that it actually made its trip and delivered its payroll kept a little bit of a cap on the rally, but again, that is part of the reason we rallied in the first place. You do see a dollar rallying today, but crude oil rallying along with it. And then on top of that, a report on demand growth came out from a well-respected think tank, and this particular report pointed out that this is now the 8th year in a row since the credit crisis that we have demand growth for crude oil, and 7 consecutive years where that demand growth has exceeded 1 million barrels a day per year. And this particular year, they're estimating a 1.7 million increase in demand. So the battle between U.S. shale and demand growth is really at a stalemate when you see the amount of barrels of oil coming on the market with U.S. shale compared to netting that out with the production cut from Russia and OPEC and Venezuela's continued declining production. We're really in a stalemate in that particular battle between supply growth and demand growth, which is why even though U.S. shale is going gangbusters, despite the drop in rigs we saw last Friday, you're still seeing those inventories shrink down to a recent count of 44 million barrels in excess supply. That's a lot less than the 150 we saw about 12 months ago. So continues to shrink, continues to bolster the bullish case. Today we do have a stronger dollar, so we do see a limit on the bullish run in crude oil, but we did end up getting up to 63.50 near the end of the day. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.